Hey traders, welcome back. In this video, I'm going to take you through a full week's worth of trading using my own variation of what you may know as the 714 method. But I keep it simple, focused, and backed by real price action. We'll be analyzing gold on the 5-minute time frame, and I'm going to walk you through each day of the week, showing you how I approach the market step by step. From 1 p.m., identifying structure, spotting support and resistance zones, and deciding when to trade or stay out. This strategy is clean, effective, and with the right mindset, can help you build consistency over time. You'll see real examples, including trades we took live, wins, losses, and even days we didn't trade at all. And just so we're clear, everything I'm about to show you is already more than enough to go out and practice on your own. If you're serious about this and want to take it further, my contact details are in the description, but my time won't be free. Now grab your notebook, pay attention, and let's get started with Monday's chart. So here, we're looking at gold on the 5-minute time frame. Now, personally, I like using the 5-minute or even the 15-minute when I want to get a clearer picture of short-term structure. These time frames help me zoom in on what the market is really doing in those key moments, especially around specific times. Before anything else, make sure your chart's time zone is set to UTC+2. That's very important because if your time is off, everything we're doing here will be out of sync. Just double-check it now and adjust accordingly. Now let me make this clear. What I'm about to show you is my own variation of what many of you already know as the 714 method. I've tested it, I've adjusted it, and I've shaped it into something that works for my personal trading style. And now I'm sharing it with you. In this variation, I'm keeping it simple and focused. Instead of using multiple vertical lines like the original method suggests, I'm using just one, placed at 1 p.m. South African time. That's when I start watching the market closely. If you're outside South Africa, make sure you convert 1 p.m. South Africa Standard Time, UTC+2, to your local time. This timing is crucial because it aligns with a key part of the New York session and can often give us clean moves. Now, once that vertical line is placed, here's what we do. From 1 p.m., we start paying attention to the direction of price. If price is pushing up after that 1 p.m. mark, that's a sign of potential buy-side liquidity grabs, and we start preparing for shorting opportunities. If price is dropping after 1 p.m., it's the opposite. We shift focus to buying opportunities as we anticipate a reversal to the upside. Simple, right? But powerful if used properly. Now, I need to say this up front. Please don't go flooding my inbox asking me to explain this again. I'm literally giving you the breakdown here in a way that's easy to follow. If you're serious and want to work directly with me one-on-one, that's something else entirely. But let's be clear, time is valuable. Mentorship won't be free. This method works because it's based on structure, timing, and liquidity, not just guessing or hoping for a direction. It's not a magic trick. It's about being patient and reacting to what the market shows you after a key moment in time. Now let's look at a real example to make all of this click. This chart right here was from Monday's session, and I want you to pay close attention to how price moved after 1 p.m. We're going to walk through it step by step and apply exactly what I've just explained so you can see it play out in real time. Let's get into it. So from 1 p.m., we can clearly see that price was bullish, right? And as we've already established in this method, when price is bullish after 1 p.m., we start looking for selling opportunities. But, and this is important, we don't just enter blindly. That's not how we trade. Instead, we want to identify the nearest resistance zone because we're looking to trade the reversal to the downside from a logical area. So what do? We zoom out a little to get a better view of structure. And right here, we can see a zone where price previously rejected. That tells us this area has historical significance. It acted as resistance in the past. So we go ahead and mark that zone as our active resistance level. Now, if we look a little higher up, we can see there's another resistance area above, but that's not our primary focus. In this strategy, we mainly focus on the nearest resistance, because that's the zone most likely to react first. However, we don't completely ignore the upper zone either. To account for both areas, we can place our sell position around the first zone, and then make sure to set our stop loss slightly above the second, higher resistance. Why? Because sometimes price might push up to that second zone to grab liquidity before reversing. We want to protect ourselves from getting wicked out too early. Now look at how clean this Monday setup was. Price came into the zone, respected it perfectly, and reversed to the downside, just as anticipated. That's what I mean when I say, wait for the market to show its hand. It was a clean, straightforward move. No confusion, no guesswork, just structure, timing, and patience. All right, now let's move over to Tuesday and break down what happened next. So just like always, our focus point is right here at 1 p.m. That's the time everything begins for this method. Now, this was a trade we actually took live on YouTube, so some of you watching were there in real time, and you know exactly how this played out. When we look at price action, we can clearly see that from 1 p.m., price was bearish, right? And based on the rules of this method, that means we shift our focus to buying opportunities. We're anticipating a reversal to the upside. So, naturally, we look for a support zone below, an area where price previously bounced. We marked our support zone down here, and we placed a buy order somewhere around this level, expecting price to find support and push higher. But what happened? Price violated our expectations and pushed even lower, hitting our stop losses. This trade didn't go our way. And that's the truth of live trading. This was a real loss taken in front of everyone. And that's okay. It's part of the game. No strategy, no matter how well tested or consistent, is immune to losses. What matters most is that we stick to the process, manage our risk properly, and don't let one loss shake our confidence or discipline. Losses are part of trading. What separates the good traders from the reckless ones is how we respond. We learn, we adjust, and we keep showing up. Now let's keep going and take a look at Wednesday's setup. All right, so first things first. Let's adjust this vertical line to exactly 1 p.m. As always, that's our key focus point. I keep repeating this because it's important. 1 p.m. is where we begin observing the market. That's when we let the market show its direction before making any decisions. Now, when we observe Wednesday's price action, we can clearly see that price was bearish from 1 p.m., right? So according to our method, that means we shift focus to buying opportunities. We're looking to catch the reversal to the upside. Looking at the chart, we identify a clean support zone down here, an area where price previously reacted. That's our area of interest. So we went ahead and placed a buy position around that zone, and our target was this previous high up here, a logical level for price to reach if the reversal plays out. And as you can see, this setup played out perfectly. Price respected the support zone and pushed up, hitting our target, just as anticipated. This was a clean, successful trade. So let's quickly recap the week so far. Monday, we had a win, textbook setup, clean execution. Tuesday, we took a loss, price didn't respect the zone, and that's fine. Wednesday, we came back and recovered with a clean win. That's trading. You don't win every single day, but when you stay consistent and follow the plan, things even out, and more importantly, you stay in control. All right, now let's move over to Thursday and break that one down. All right, as always, our focus point is right here at 1 p.m. That's where everything starts. We wait for the market to show us direction before making any move. Now looking at Thursday's price action, we can clearly see that price was bearish from 1 p.m. So based on our method, we start looking for buying opportunities. Down here, we spot a clean and well-respected support zone, a level where price has reacted before. So what do? We go ahead and mark that support zone on our chart. Then once price comes back to test that support, that's our cue to prepare for a buy setup. We go ahead and place a buy position right around this area. As always, our target is the previous high. And in this case, this level right here made the perfect spot to take profits. And just like that, Thursday gave us another clean win using this exact same structure and process. No guessing, no stress, just following the system. So, to recap, Monday win, Tuesday loss, Wednesday win, Thursday another win. You can see the consistency. Not every day is perfect, but over time, the edge shows up. All right, without wasting any more time, let's move on and check out what happened on Friday. All right, let's wrap things up with Friday's session. We start off by doing what we always do, placing our vertical line at exactly 1 p.m., and from there we begin to observe price movement. Now, looking at the chart, we can clearly see that price was bearish from 1 p.m., which means based on our method, we should start looking for buying opportunities, ideally at a strong support zone. So we zoom out, looking for the nearest support area where price might react. But in this case, there's nothing nearby. No clean support zone, no strong structure that we can rely on. And that's okay. In situations like this, when we can't back our trade with solid technicals, we simply don't take the trade. Discipline is key. Not every day is a trading day, and forcing trades where there's no structure is a quick way to lose money. So Friday, we sat out. No setup, no trade, and that's still a smart decision. Now you've seen how the strategy performed throughout the week. Monday win, Tuesday loss, Wednesday win, Thursday win, Friday no trade. That's the realistic flow of trading. Not every day will be a winner, but over time, with consistency, patience, and structure, you build your edge. I'll say it again. This is all the information you need to understand and apply this variation of the strategy. Please don't DM me asking me to teach this again. I've already given you the full breakdown. If you want to work with me personally and get one-on-one mentorship, my time is not free. My contact details are in the description if you'd like to get in touch. Until then, keep practicing, stay consistent, and respect the process. And that wraps up the week, traders. As you've seen, this method is all about structure, timing, and discipline. Some days you win, some days you take a loss, and other days you don't trade at all. And that's completely fine. The goal is consistency, not perfection. The 1 p.m. rule, combined with clear support and resistance levels, gives us a solid framework to work with. But like I said earlier, don't expect magic. You still have to show up, do the work, and stay focused. I've shared everything you need to understand and apply this strategy. So don't message me asking for more breakdowns. This is the full playbook. If you want to go deeper, get mentorship, or work with me directly, my contact details are in the description. Just know my time isn't free. Until then, keep practicing, manage your risk, and trade smart. I'll see you in the next video. Stay sharp.